So, looking at a week and daily, and this is what it is. So let's see how the wave count looks. Take a look at them. Here's an S&P. Um, Wave one, down in two, up in three. Here's your four. Made a new higher high, as we all know. So the all-time high is 61.28. So if we take a move from here, from the low back to the upside, as we can see, we made a new high, right? And then last Monday, and then the tariff news, and then these are the same thing we just looked at them on the daily and a weekly time frame before. So what we can make out of here. So if this is one, here's your two, up in three, four. Now we need five smaller waves to complete this blue five. So in order to complete this blue five, I cannot move this thing here to call it a five-way move. The reason why I cannot do that is because this decline that we just had here, this is a three-way move, right? In order for us to make for me to put the five here, we need to see something like this. We don't have all we have is this. So this is what we call a flat, A, B, and C. So if this is a flat here, and so we have five up in one, three down in two, in as a flat. And then from here, now we need to make the third wave to the upside. Now we need to have five smaller waves to complete this third wave. And then from here, gonna be another fourth, then fifth to complete five smaller waves, which is these brown ones, off this fifth wave of one, two, three, four, and five, off the third wave of a one higher degree. So yesterday, the reversal day that we just had, I mean, is it still a fourth wave? It is possible. Even the fact that we did make a new high right there, right? But none of these other indexes had made a new all-time high except for S&P. So is it something, are we doing this? If market is going range bound, is it some sort of a triangle or something? But I cannot call it yet. But the worst case is we could do something like this, kind of like three down, three up, three down. You know, this is a possibility here as well. Every time when the market gets range bound, back and forth, it's it will starting to show that starting to give you some signs that if you're starting to look price at a bigger time frame, it's gonna most likely it's gonna turn into a triangle. So if we could leave the wave count as is, which is fine, but at the same time, instead of putting the four here, it might land somewhere around here. If this is just kind of go more sideways, because this price action here it looks way different. This price, it doesn't look the same anywhere else, you know? So if you have, so this was October low. So we had a huge move up, simple three-way down, and then you see like how these these moves are. And then when you look here, there's nothing looks like the market has actually done anywhere, somewhere, anywhere here. These are more directional move. It has a tilt to the upside, not to the downside. This was a mess that we had from December, from whatever that most people would expect in the Santa rally is going to come, this and that. But last year was a different case. This is where a lot of people got hurt as well. This is not easy to trade. This is a nightmare. Back and forth, back and forth. This is that you come down and you make a recovery all the way back up, but the time that you're losing and the premiums are just getting hurt with the spike on the IV, with VIX, with the volatility and stuff. The Vega is gonna hurt those trades really bad. So I'm glad it is over. And so I mean, we could consider something A, B, C, D, E. If this is a triangle, okay, then we gotta have to put up a stop loss right there. Invalidation will go right there. So you have an A, B, C, D, and E. So this E wave must stay above 59.23. E wave cannot retrace below the C wave low. That's the clear invalidation mark for a contracting symmetrical triangle. Now, if you look at the Qs, okay, so we could make a case here for a triangle for sure. Now, here's the thing though. Same decline, we rallied up, but we didn't make a new high. Backed off on the DeepSeek news, managed to rally it all the way back up, sold off on tariffs, then managed to back up all the way back up, made it basically what we did 531.52, and we made a new high 532.10. And yesterday we kind of, we backed off again after job report. Now here's the thing, because triangles are very tricky. Okay, let me zoom it. So we can do two ways. Now, triangles only forms in a fourth wave, nowhere else in the entire trend wave. So if you have a symmetrical triangle in a fourth wave, you have fifth waves coming next. That will be your final move to the upside. So now, making a triangle, can we do this? Yes, because you see, E wave has not retraced below the 5, 10, 15. So we could do this as well. This is a completed triangle. And this one, when you have a completed triangle, when you had a move up, you have to move above the D wave to complete this triangle. That gives you the confirmation the triangle was completed. We did that here, as you can see. So we could do either this, that would be the next move. So where we could find support here in wave 2, right there. If we do this, this lines up with the same 1, 2, 3, 4, 5. You see, they're matching side by side, as you can see it. Now, how do we make a bear case? Well, we're just trying to bet something here. So you betting on S&P to see if you can manage to play this downside move. But it's at the same time, Elliott is either showing you a 1-2 count to the upside, Same thing with Qs. Or you just says like, okay, I'm just trying to play the E wave to the downside toward this triangle. You see like range bound market are very tricky, and these damn corrections are like seems like they're never gonna end. It really makes you frustrated, makes you mad, and like, what the heck? Like, why we're so range bound? But at the same time, when we look at them, like, well, how many highs are we gonna make? Right? Market is gonna back off at some point. So if market is correcting based on any news and stuff, I mean, to me, I think it looks it is a very healthy sign for a trend because you just don't want to rip like crazy to the upside because that's dangerous. You rather have few corrections along the way. That's considered as a healthy trend. You don't want to like go straight up like a Bitcoin or something, just trying to make a bubble. I mean, how you think that will end for everyone in the end? So moving labels around every single day is not a smart thing to do either because that's not how you trade. You don't just make a wave count one day and the next day the session goes by, then you keep changing and you keep moving your labels around. That's not how trading or labeling works. If you just, it looks like you're just basically all over the place. You don't even have a plan. You just, okay, if there's a 1-2, fine, or if E wave, if it comes back down, yeah, if it's gonna come back down here, a lot of stocks gonna get hurt again. So you don't expect a market to be down 400 points and the stock that you're holding is gonna go your way. I mean, any 400 point sell off, it's gonna hurt pretty much every sector across the board. Like yesterday was Amazon. I knew it that Amazon is gonna take a hit. It's gonna drag the XLY sector with it. Amazon is the largest holding of XLY. So you have a company over $2 trillion taking a hit. What do you think is going to do to the sector? It's going to be under pressure. So Tesla is the second largest holding of XLY. So these are the top two. So to me, the way Tesla is coming down, we'll talk about it later and I'll show you. Somebody's in that stock. Somebody had a position on this stock that is the way Tesla is trading from the last few days. I don't know if it's his brother, if it was him, if he's trying to get some cash for TikTok or whatever, because nobody hasn't decided. Like, well, Trump knows who he's gonna give TikTok to. He's talking about Larry, the Oracle CEO, that he might get one. I mean, who knows what's going on behind doors? But if you, I mean, if I have to make my call to see like who's gonna get it, you can literally say like Elon is gonna get it, right? He already has Twitter. If he takes over $1 billion user of TikTok, what kind of you know, imagine. I mean, this thing just because these days people getting more information from Twitter and from TikTok than actually watching the news. And at the same time, nobody believes any news, and it's just, I mean, I don't know what kind of a deal that they're going to cut, or well, we're gonna find out who's gonna get them. But I would leave the way it is. It really doesn't matter if you leave it here as a 1-2 case, or if you're gonna leave it as and label it as E. It really doesn't matter. So your retracement here will stay the same. Okay. So what we will watch for next week, starting Monday, I'm gonna watch this zone. Um, Keep this as an invalidation right there, 59.23. The 59.23, remember we just looked at them on a SPY, right? That that's the the low of the week that we just had. This is the Monday low right there. So I'm willing to. There's a lot of support here. It's not gonna toward this 7 8.6 kind of range. I have to look and see which strike to pick just to leave a hedge in the board. If I have to go out all the way until March, we can do that, Leave it out on the board, see how it plays out, but and keep looking for trades to the upside. If the downside comes in play, and that will definitely offset your upside loss. Paper loss, I don't consider a loss unless you officially close the trade. If the trade is down. I mean, it's doesn't consider as like, you haven't closed the trade yet. I had a what was that trade? McDonald's. I was watching the rotate. I took a trade based on the rotation, and I knew that the trade came all the way back down to like over $1,000, and I've been every day. I'm like, okay, are you really gonna make a move now, or day or tomorrow, next day by day? I'm just like, and finally the damn rotations moved out of that lagging quadrant toward the improving. That's when the McDonald's got a big, huge pop. It had a nice alpha because it has a quite a bit of distance from the midpoint. I was like, I hope I timed that trade a little bit early, but again, you can't time every single trade. But it ended up being flat, and now they're gonna McDonald's earnings is on Monday before the bell. So I held one contract. I was like, I'll just hold them as a lotto now because I closed the rest of them as pretty much flat. Like made like 70, $72 on it. But like the point is like the trade was down over $1,000 for me, and then it just made a full rebound. And it just don't, like I don't know if some of you guys watch boxing or something, and your coach never throws a towel in the ring. That's meaning like you're quitting. So it's just if you have plenty of time, you just gotta be patient. That's all it is. I'm watching. I mean, I cannot move every trade, but we'll win most of them. I can tell you that. Um, so leaving this one to the Qs, we could leave that as a 1-2 case, or we could just leave this one as a 1-2 case. If that's the case, we can just put in validation right there, 511 on this. So we have this zone that we'll watch on from Monday. Okay. And this is this I don't know. This is a triangle. If we really gonna go 1-2, we can do that as well. I mean, we could just put a fourth here, just like that we had them on the spy. Then we can just go from here as a 1-2, like this. We can do this as well. So this is only well. So now this way, these two will match side by side, like this. You see, you have same triple combination down in WXY, connector X down in Z. Here's your clear wave one. I was really hoping for this to make a new high, but it didn't. And then here's your flat from the last 2 weeks we just had. And then from here, the same thing here. And then from here You could do 1, 2, just like this. This is, I mean, if you look at them side by side, this is perfect, right? You want index, the ETFs. I call indexes when so used to it, but you want SPY and accused to go side by side. You don't want to have something one going to the upside and you trying to fight other side to the downside. That doesn't work. It will never work. So you have to make sure how you how you count, and you want to make sure that you just wants to bring them as close as possible, because what drives SPX? The tech. So what is the most important index in the market? Is tech. So when the tech is down, it's going to drag the whole market down with it, including semis, right? When the semis gain strength, even the fact the Mag 7 will go sideways, semis takes off, where does the strength goes? Here. From here, it carries down to the S&P. It's just it's how it works. This one benefits from two sides, from semis and Mag 7. For Mag 7, you need two stocks to move on a daily basis. Index will hold really well, you know? Like yesterday, look at the price. Amazon down almost 5%. Meta was up, and then Netflix is up. You see? Like a one big huge market cap company is dropping, right? But at the same time, other two are making up for it. So that way, your communication sector right there, that's what these three stocks are in. Sorry, the talking about, I had them confused. Amazon is the XLY, not the communication. Google, instead of, remember the Google had a big hit on earnings. So when Google is down, even the fact yesterday Google was down almost 9 points, but Meta and Netflix was up. So that's what you have to watch, is to see, like, you see like one is getting hit with the earnings, but the other two are trying to hold the sector. So we could leave it like this as well. It's tough read, to be honest. I mean, I don't want to post this thing like every single day, and then you be saying like, what the heck is going on? Put a four here, make a triangle here, then you do a 1, 2 from here. It really doesn't matter, so looking at the price can be called, like, if you just wanted to say like a price was making lower lows and lower highs here, okay, fine. But then what happened here? But at the same time, now everybody says like, okay, now we're making lower lows and lower highs again. Well, how are we doing this? We can make a case here, right? That's what everybody's saying. Lower lows and lower highs. This high is not a lower high. It is above the previous swing high. So how can you call this that we're doing lower lows and lower highs? It's just this is the biggest problem that most traders have. They're are fighting one chart, thinks that this is it, but they don't look at anything else. That's not how it works. You can't just sit and fight S&P 500. You're not even looking at what's going on with the NDX and IWM and the Dow Jones. Look at those as well. Put all four of them on your chart like this, split a screen, and watch all of them side by side every day on one screen, on one monitor. Then I will ask you in a week or two, how do you view the market? But most people approach is is just based on this. Or we're making lower lows and lower highs. But where are we sitting from this print? And how many more highs that we could make? I mean, just follow the trend. That's the simple thing is this until it fails. Um, Bigger picture is this. Let me make this thing. This is a bigger picture right there. It's what I have. This is the bear market. It is really simple. This is the COVID crash. Okay, right there. This is the 2022 bear market. So consider as what? This is one bear market. This is the second bear market in 2022. That's a lot of price. Now, if you really wanted to go further back, you can do that. So let's make it even more clear for you. This is a 2022 crash, sorry, bear market. This is a COVID crash. And this one back here is the credit crisis, right? Housing bubble. If you simply take, okay, the COVID low to this high where we, this what you know, the 4818, the 2022 low of the bear market. So if you just measured these two, 100% relationship at 76.75. So any crash or any bear market will always going to be a correction on a one higher degree of your wave count. Always. It's not because market don't starts out as like this and then it just continues like this for the next decade or so. It never been, there's no such thing like this. So that's going all the way back here because I'm tracking this. So this is a monthly wave count on a much higher time frame. But I'm gonna just take the credit crisis low, which is right there, 666. And we're gonna try to count this one, two, three, four, and five. This is gonna take, I don't know, probably be retired, but before then it's gonna get to $18,000. But we're just gonna what I'm trying to do is like I'm trying to count this five waves within this cycle degree fifth wave to the upside. This is going all the way back to 1950. Keep that thing in mind. That was when S&P was $16. 16, yeah, 16 points. From 16, we're sitting at what 6,000 right now, 6,025. So it has a long way to go. Um, the dips and crashes and this and well, we don't know that. That's in order. These are monthly bars, so this is a very long time frame. But it's a very clean wave count, especially with time and price as well. You take the 1950 low, you have a clear five waves up to the upside to 109.37. Here you had a bear market, okay? It lasted 24 months, was 2,160 days. And then from here, we have one, two, up and three. Look at literally a textbook print, three versus one, 161.8. Then we had another flat down in fourth wave. Typical retracement on a higher degree, fourth wave is always going to be 23.6. Worst case, it could be 38.2. That's where the fourth wave usually finds support here. That was 36 months. This was 24 months. So you have a wave two and wave four relationship right there that meets all expectations. And then from here, we're looking for this fifth wave. So this fifth wave right there would have just ended here. Okay, but that's not the case. This is the extended fifth wave. Okay, so it has a long way to go. Now, if you just compare a time, if you look at from 1950 to this high was 73 months. So from 73 months divided by what, 12 months? That's 6 years. 6 years and roughly like 7, 8 months. So now if you take the COVID low, sorry, the credit crisis low, and the housing bubble pop, right? If you only simply take the time relationship of 5 versus 1, it doesn't even end until April 2027. This is the minimum, bare minimum time that you have to match, and it will match. If it gets extended, that's a different thing. We're not there yet. But this is the minimum time frame the 5 versus 1 has to reach in quality and time compared to this wave 1. You have Elliott wave has a very nice channeling technique. If you simply take this crash low of which is 60 points to 666 to the credit crisis low and just simply project it to the top of this wave 3, how much room do you have here to the upside? So don't forget the bigger picture. You wanted to fight the daily time frame and all those are basically all noise because you're looking at 15 minutes or a 1 hour time window. Those are more like shorter term swing trades. But when you look at a bigger picture, it's gonna give you a way different view. Should if you ask me what is I'm a buyer on dips. I'm not a seller, you know. So if we take 2025 now, 26, 26, 27, I mean, this will be for, for under Trump we're talking about, right? For the next 4 years. So his term will end as one, 25, 26, 27, 28. So on his term, I don't see a market is gonna crash. It can come down 5%, 10% to the downside. That doesn't mean it's a market crash. It's just a correction. You need market crashes are like this. You need 57% decline, 55% decline. You see how directional these bars are? Like hardly any pullback, just nonstop selling. You know, I mean, it's a tough bet to make for this to happen. You're talking Nvidia, Apple, like these stocks are losing like more than half of their market cap. Based on what? You know? So you're gonna whack a $3 trillion company down to a $1 trillion company because you want to roll over the market? Yeah, it's just you have to look at those bigger companies as well, how they're doing. So having a fifth wave and put a one here, two here, three, you can do all this. But if you just focus on these two, because this is the COVID, this is 2022. So we're just gonna focus on this part. There's nothing I can do to this wave count. This will stay like this, I don't know, for the next several years. Because these are monthly bars. I can't put something down here or here, I have to go to a smaller time frame to see if I could just continue. The market can, stays on a daily or a weekly time frame based on this because this is 1 month. I mean, you know how much time it is. So I have it. I've just gonna leave the way it is, let it play out and see how it goes. And then on month-to-month basis, we'll just keep looking at them and see how it progress, like how it unfolds. So I did write all I think I posted this thing on Twitter as well. I have all the time relationships, I have all the upside fib projections, I have everything there. But this is a long way to go. So back to this, this is the same. You see 1, 2 right there is the same 1, 2 right there that we're trying to look at on a smaller time frame. So you take the 2022 low from the COVID low, okay? Now we're gonna have to find what? 5 waves within this three, okay? Now you take one down in two, then from here, let's run our, forget about these the five smaller waves within the three. Let's look at a typical three versus one, what the ratios are. These are the typical upside projections we look for. 161.8. That's what I love to go on every wave count. 100 is the first one. 100. It's distance travel here in one, projected from two, give you an equal distance at 100 relationship, right? Which is right there, as you can see right here. So that was met. So from here, we had a 10% drawdown. Then from here, we manage all the way back up. That's where we are. Then 161.8. Then we have a 200%. Here we have 261.8. This is where the market is fighting. And I can clearly understand why. Okay. So we're going to leave the 3 versus 1 right there. Now from this third wave, we have five. We need to count 5 smaller waves within the third wave. So we have 1 down in 2, 61.8, up in 3 again, which is again 3 versus 1, right? Remember we looked at 100, 161.8. It's a typical retracement for a third wave. Down in 4, which is 50, 50 the 38.2 and 100% relationship. It was really close. I mean, if you can do this. Um, so and then from here we'll keep making higher highs and higher lows. So now from the fourth wave, now we need to count five smaller waves to complete a fifth wave of a third wave. A lot of people out there, you might come across, they're putting the fifth wave right there, calling a 15-year top. No, it is not. What we are fighting right now is this 261.83 versus 1. This is a very strong fib. Okay. A third wave. I mean, the next one is up is 423. I'm not gonna even go that far for this third to go that, it doesn't no. This is where the S&P is struggling right now. And I can see it why. I can show you any wave count. If I label this thing right, and if you're gonna approach and get close and like get to that 261.8, your third wave is coming to an end. This market from here is due for a fourth wave now, and it's coming. I don't know when, but it will come. We have this. I laid out, I mean, these are the, well, I don't, I mean, if it depends if if this top holds, and if we kind of poke above and kind of like made a one more little bit of a push to the upside, I mean, we can do that, but then the time will change. But this is the daily time frame, so I do watch on a daily basis, but I'm not going to do anything yet until we make a new high yet. If we do end up making a new high, and then the time will change, and then slightly whatever depends on what the upside is. So these ratios will change a little bit. But for now, we just leave the way it is. But you can sit and call how is this thing is going to come down. But this fourth wave right there is going to have a relationship with this decline right there. So this decline was simply an ABC. If this is going to be an ABC, I don't know that. Is it going to be a complex? We don't know that. Is it going to be a triangle? We don't know that either. Okay, because I don't have any signs yet. Once I will get the confirmation from Gann, from the swings, then I will say like, okay, yes, let's, well, we're going to have a decline. We're going to have a bit of a rally all the way, depends how it goes. But if we just consider and just to think like what will be our minimum fib time relationship for this dip to complete is between this. I want you to be mentally ready for one thing. The summer is coming and market is going to be very choppy and difficult. Most people don't realize or don't remember it. Summer markets are the most difficult markets to trade every single year. Just remember that. Same thing happens in the forex market. Same thing happens in the stock market. As soon as you're going to reach that mid-year, it is where a lot of prices is going to start to consolidate. Basically just it goes through different phases. Market reaches the midpoint of the year, consolidates, and then we'll see if it makes the initial move back toward the end of the year. Russell 2000 index rebalanced right there into a summer as well. So a lot of those small caps companies going to come out. Some of them is going to go back in, so a lot happens in the summertime. That doesn't mean that we're not gonna trade. We will trade, but we'll trade with cautious, with cautions and see how the wave count looks and how the swing looks. For me, it doesn't matter. I mean, we can trade any market. It doesn't mean that if summer markets are choppy, that we're not gonna trade. I mean, if we have to reduce risk, we will. But that's the only thing. But summers are very difficult markets. Let's just put it this way. Um, this is, I mean, I know that a lot of people will start calling 15-year top, and here goes the crash. Okay. Because I just, like you just go like this and you're just gonna come like this. That's what people think. I just want you to show me one thing that has it ever happened before? Show me one retracement on an S&P 500 since 1950 that you rallied this much and you just went all the way back to the lows. Show me where. I mean, I would love to see it. I can take you all the way, show me where. That you just go all the way up north and just come all the way back down to the lows. When has that ever happened? But, this is what that look at this. What was the COVID crash, right? 35%. This was 27.53%. Two bear markets right there. And then you have a 35% here, 120% upside. So if you have 120% upside and but then you giving back 27%, really? This is why I was buying this market. I was like, okay, fine. Fed came, this and that, all blah, blah, blah. We did all this. But the point is this that you rally like this. Do you see something like this? No. If you even simply draw your fibs from here to here, where do we end up? Let me see if I can put 50 here. Not even 50. 38.2. Here you go. 38.2. Get rid of all this. We don't need this. It's where the bears kind of poked a little bit down here, but here 38.2 from your COVID low. And from here, 71% upside against 27% the market declined before. You have to understand one thing that look, trading is all about patience. You know, it's all about patience. There's fast money, and I want to make this, and I want to make this. I mean, that's just a little bit of a wrong approach. You should never ever do this to yourself. I want to make $200 a day, and I want to make $300 a day. That is just the most toxic thing you can do to yourself in trading. Never do that. Stay open-minded. You can make over 1,000 in one day, not only at $200 or $300. That's what most people are chasing every single day. Smaller account people I'm talking about. Trade is a trade. You don't know that, how fast it's going to move and what the payout is going to be. But if you're going to make 200 bucks, you're just going to cut the trade and call the day off. That could go up to a $700, $800 for you. Um, I'm not gonna post this thing anywhere, to be honest. I'm sick and tired of these copycats out there. It's just painful, seriously, to look at them. I posted yesterday, Twitter on a Tesla wave count. I think I did last night. And one of a guy sent me a screenshot of this guy who does Elliott wave. I was like, look, this guy already copied the wave count, and he actually showed me what he had before. And he came across, probably saw the wave count that I just posted, change it right away, and say like, yeah, this is a complex correction on a Tesla. Come on, you know. This is what, look, I don't really spend that much time on Twitter, but I have a lot of loyal followers. They look after me, to be honest. I'm not gonna lie. I what I get direct messages from those people, like, who not even in the group, but they just see like, hey Mo, look, like, they're actually sending me links. I have few Discord services right there, share these, they're copy pasting these charts. I see all everything. But I'm not gonna go after or gonna wait. Just what it is. I can't do all this. So it's just ridiculous how fast everything can change. Like, if you, I mean, I don't think that I change my wave count that often. But I mean, I would struggle in in a complex or some sort of a ABC or a zigzag kind of correction. Those are very subjective, anyways. But most of my time, my wave count just stay as is. I don't change them that often, unless if I really, really have to. So even the S&P has made a yearly high. Now you have to look at this way. The S&P right now has a yearly higher bar for the year because we made a new all-time high this year. So my upside targets for this year is 64.85 and 69.75. It doesn't matter that we come down here, we come down to 5,000. It really doesn't matter how much of a retracement that we're going to get. These upside target will stay as is. Those are the projections I run from a different high and lows. So the equal, what I think, and I'm pretty positive about it, that we're gonna have an extended fifth wave because of the diagonal here in wave one. And I can show you hundreds and hundreds of wave counts over the years. If you have a leading diagonal in wave one, you're always going to have an extended fifth wave. I wouldn't say like always, but call like 75%, 80% of the time is going to have an extended fifth wave. Diagonals in wave one don't get truncated fifth wave because wave one has a relationship with wave five. So if I take that into a consideration, is like, and then measure those two COVID lows with the bear market low, 100% minimum is 7,600 points. Just measure two equal move. But you just gotta have to find five waves, either an ABC or however you want to do it. A lot of people don't. I mean, I'm not trying to make a fun. A lot of people don't know how to label bigger, higher time frame wave counts, anyways. They don't. So this nightmare, if it's gonna be due, at some point, um, we we're gonna deal with this zone right there between 6,100 to this 57-ish kind of range to this high. So if we do just an equal move, let's say like a minimum downside retracement for 4 versus, oops, 4 versus 2, meaning that the distance traveled here was 9.21. Take the high here, put it right there, 9.12, 55.63. It's a 10% decline. That will be the minimum downside time, the price relationship of 4 versus 2 with 2 versus 1. And then from there, to poke a little bit down to this 23.6, which is a 4 versus 3. Okay. This has called 4 versus 3. That starts from this retracement, not from here. So you're gonna have to know where your highs and lows are, and it changes from time to time on a time frame as well. Now, having a this decline in the next couple months doesn't mean that it's going to be, I mean, it's going to be that we're going to start a massive bear market. It's going to be a really, really good buying opportunity because having a higher yearly bar to the upside. So we're going to buy, I'm a buyer on the dips, 100%. So we'll see which sector will show more weakness, which sector willing to hold. But I'm thinking about, we'll see. I have to look at a few things just to put a little bit more money into defensive sector, just to have some defensive, uh, you know, um, compared to the, I'm going to show you later. Um, so this is the bigger picture right there. But now what we're trying to do is we're trying to see if we could get bit of an upside here and this fifth wave off a fifth of a third. I'm not putting this here. If we do that, let's say for a heck, if we do that. So you have to count this entire wave like this. And I really don't like that way. Here's your 1, here's your 2, here's your 3, 4, and 5. Okay, so you have 1 here, 2 here, 3 here, 4 here, and this is a fifth wave. But compare this to this 5 waves of this third, extremely small. It's not going to work. It is not going to work. You're gonna be try to outsmart Elliott wave. Elliott wave will stop you. I can tell you that. This is, look at this print. 53.25 high, 53.27 fib for the decline. Look at the low here. 4103, 4096. How can you beat that? And it's not like you get all these prints almost to the penny. You gotta know where to start and how to label your wave count. They're not just not gonna appear in a blue moon. You have to, if I move this thing around, it's gonna change everything to the top to the upside. Watch. Oops, this is already done. See? Everything will change. Time, fibs. I mean, this is very important how you label stuff. Everything will change. See? Now if you put a 1 here, watch. Let's see. Now it becomes 3 versus 1 instead of 261.8. So you really have to spend time to know how to count. So if you put 1 here, okay, then you still have 3 versus 1. So what happens after that? Let's say well, you're going to have a fourth wave, right? So if you land them here, 3 versus 1, what happens next? Fourth wave. So if you even put here, I'm showing you, yeah, the 3 versus 1 is here now. Still a third wave. You don't have any signs for a fourth wave, anyways. So pay really good attention because I don't know. I mean, a lot of you guys don't do Elliott, um, but you have to be really careful because wrong labeling that's gonna cost you money. It's not gonna make you money. I can tell you that for sure. So you're gonna have to take a time to really take a good look at the wave to the price to see exactly how to label account because everything can change and like if you trying to break some rules here trying to make one smaller degree bigger than a one higher degree your upside is going to be a mess. Those are very difficult. Like you have wave one, here's your wave two, and then you have a smaller wave one and you have a bigger wave two like this. So you have one higher degree and then you have one smaller degree and you're looking for a third wave. When you making these smaller subwaves bigger than your primary subwaves, it's very difficult to measure the upside. You think I haven't tried it? Those wave counts are very hard to fight to the upside. Okay, moving on. MSTR mess. I don't know what's going on here, to be honest. MSTR is had two inside months back to back. So we're talking December, inside month, January last month, inside month. So when you have two back to back inside months, you're not going anywhere. It's exactly what it is. It's just your 2 months right there. So we're talking December to here. There's your time frame right there. Here's your December up till here, and here's your January. So now you're gonna go like this. This price action here is the two inside months. So there's there's nothing we can do at the moment. So unless just to wait. You cannot make anything out of inside bars or inside months or inside weeks. Those are just neutral bars. So moving these goalposts every single day really not gonna help much. So we just have to wait. I have shares. I'm not fighting any options anyways, so I have all the time in the world. It'll be fine. So there's nothing there in MSTR. So what else do I have open? Palantir. I haven't had anything. I don't have anything, but I know some of you guys are tracking this thing. Last what week we looked at them, and I believe it was somewhere around here. Earning gap went all the way up in three third. Now here's the thing. It's all about this third wave. Okay. That how much of a third can extend. It made it up to 116.30. I mean, if we just simply go with 1, 2, 3 versus 1, we have 110 and 122, which is 161.8 and 200%, right? And if the price is really going to rip, as we just looked up in S&P, that's 261.8. So on your chart, you should just watch. Well, the price already went above 110. The next would be 122. There's no point to look that far up unless you have to get there first. It doesn't mean that the price will get there, but it can, or might just end it here. So this third wave of 3 versus 1 can end anywhere here in this zone between 110 and 122. That's a 12-point window. And then from here, you're looking for this some sort of this fourth wave to come down. So I think it worked out pretty well for some of you are holding Palantir from here to here. So if we leave this third here, so we're just going to focus on this. This is it's a 2 hour, not a daily. Okay, I had them on a daily because it doesn't have to manually change it. So you can do this. Jeez. So now let's say if you have 1, 2, that's your 30. See if I'm right, put on the 300 is fine. That's your 4 versus 3. That's your third. Now let's say if this price is coming down, where do we find our downside retracement? There you go. That's your downside retracement for wave 4. So for next week, you're going to watch this as long as it doesn't make a new high. And if it does make a new high, you know your upside is 122, meaning that if this price rebounds and just go and touch that 200%, that's 120. And then from there, we could just move this, then it will move up, you see? But for now, I'm going to leave it like this because we haven't, you just got to have to watch. And if the price doesn't manage to break above the 116.30 point, 116.30, then you could expect and look for 122 print. That would be the 200%. And if this is all of a third here, okay, and then it has to come back down now to consolidate here somehow in this fourth wave. So the first zone that you're gonna watch, leaving this high as is 107, 104, 102. This zone. If this zone, if the price backs off, manage to find support here, and then from there, then we'll project the upside, look for this fifth wave, off this fifth wave, of this third higher degree. So I will run those. So you should mark set up alert on your chart at 116.30. So if that breaks, then you should look for the third 122. So it means that this is still ongoing, third wave to the upside. Okay. And then if the alert doesn't go off, it close at what 110, and then just look for this zone first to see what happens. Okay. New high. No, I don't need to adjust anything. You have 3 versus 1. three versus one, you have 110 and 122. Okay. I don't know where the price is gonna stop, but neither do you. Okay. We trade probabilities. We don't, there's no such thing a guaranteed here that the price will must reach this point before it backs off. It doesn't work that way. You don't lay out these kind of a statements. That doesn't make any sense. You simply don't know. Neither do I. I could just, I mean, if you have a stock that you rallied from here, whenever that we looked at them, to here, it's 31% upside. Were you like what still greedy or something like, like what I mean, what are you trying to do? Like, oh, you don't want to book profit because then you're gonna book profits here. I mean, I don't know where you position and what are you doing. I don't know that. Yeah, I mean, yeah. Because all I have to, okay. So if this third, forget about this. If this third is still going, okay, that will go like this. In order to get here, you need to break this, meaning the price needs to make a higher high. Okay. So you need to look for 116. So set up a price alert on your chart of 116.30. The price will trend higher based on making a higher high. Okay. So you can do this. If the price stopped here, then you expect this for now. Leave it like this. But to me, if I have to make a call on Palantir for next week after this run, it's going to have an inside week. That's what my call, but it doesn't mean anything. But okay. I didn't really spend that much time on Elliott. It's just some. What do we have? Poster child, NVIDIA. Split chart's not gonna help me. Um, NVIDIA had made a pretty nice recovery down from this 113. I mean, it came back pretty quick, but let's go back here. We'll do this. Here's NVIDIA on a daily time frame. What what we're looking for is I'm gonna lay it out. I'm gonna show you two different ways. This is a daily time frame. So it's a much higher time frame. Let me make it a little bit bar a little bit slow. So you have one, two, and then you can put a one here as well. Like meaning this one that's gonna open crazy upside. Um, if you just wanna take a $10 price, this is because of the stock split. And if you wanna land up a one here and then two, I mean, it's gonna have insane upside. Mm, I could leave it the way it is right now, but let's just focus here for now, from this 90 low. Okay, and this is where Nvidia had the largest percentage decline of that 35%. Okay, I mean, there's some few ways that you could make this thing like literally rip it to the upside. I got to be a little bit reasonable. ATR, it doesn't give you that big of a read for you to have those kind of wild upside projections. So let's dive into, oops, boy, this is, yeah, man, this gotta be, hold on, because of the stock split, I hate them. This motive wave just, you see the gap right there? That's where the price got adjusted with the, let's focus on from 90 of a third wave. If this is all a four, okay, then this is the upside that we could look for. I'm gonna make it really the the if this four has more room to come down, what is that? We can do that as well. Something like this. Oh, oh, man. Uh, this one right there can be counted as a five waves. Okay. I took a shot with Broadcom, as you know. I love that stuff. I thought about going with Nvidia first, and I was like, I'll take my chance with Broadcom. I mean, the timing was really, really good and played out really well. Um, I try to swing at least one, either Nvidia or Broadcom once a week, either or. These are the two stocks that I watch really closely, like on when it comes to semi names. I'm not a very big fan of any other semi names, so don't. I mean, if you like something else, that's your choice. But I like to stay with these two names. You know, um, this can be counted as a five waves down. This suggests here this is the B wave rally. The NVIDIA all-time high is 153.13. So now NVIDIA earnings are coming, as we all know. So remember we talked about this 130 mark. So right there, 129 and a half to the 130. Now, if you notice, because this was the initial decline, then it managed to rally back up, then had a huge gap lower. Then ever since, well, it made lower lows. And if you notice, it just trying to keep coming back to this 130 mark. Even the fact is making lower lows, which we understand. Now we see going right back to this. It's just because of this is where the swing turned down on the Gann swing because the count here was 11. So 11th swing to the upside. I'm talking about the Gann swing count. It went up to 11. From 11, the start, it came back down. Uh, yeah, I gotta go back there and look. It was 11th swing to the upside. It was very high count. So a lot of those counts they have there goes very big on numbers are the ones that are gonna have a very good chance they're gonna roll over. So the sequence of numbers has no limit. It can go up to 14, 15, 16 swing. As long as the swing is keep making higher highs and higher lows, the swing continues. Okay. But higher and higher the counts gets, either to the upside or to the downside, it will have a very good potential that the price, the stock will rebound. So You can make a case here for an ABC, sorry, some sort of a WXY. You can do that, or we could do as an ABC as well. Doesn't really matter. I would leave this one as is for now. The answer to the upside is 78.6 anyways. So you have to watch this. If NVIDIA is going to make a new all-time high, it has to break this first. Okay, so if we doing something like this, that's a different way. That's another way to look at them. So if you have a pretty wild wave one, if your C wave is going to be shorter anyways. So that's another way to look at them. And then from here, this would be a C wave decline to complete like some sort of an ABC. So you have what's called a zigzag. You have 5 down, 3 up, 5 down. It's a simple zigzag, they call it. So we don't know that because if this right there is a this is a diagonal right there. If it could be a leading diagonal as a 1, 2 to the upside, or we can just leave this one here, put this thing into a fourth wave here. The problem here with semis is this. Where the thing is. I showed you yesterday. No, here. What do you make out of this? As much as we love semis and this and that, like, what is going on here? This is from last year, July high right there. July 11, what was it? July 11, yeah, 2024. We're in February right now. This tracks SMH, tracks all the semi stocks, right? So you have a stocks there as taken. Look at AMD. As a matter of fact, I can show you. Let's put an AMD on top of this. Look at this. Look where AMD is and where SMH is trading. Look at the difference. Day and night. Let's put where was oh boy. Let's put NVIDIA here. See? Green is NVIDIA. And let's put I've looked at all this, but I'm just showing you. Left over scale. Let's do Broadcom. It doesn't show, still showing because the stock split. Broadcom. Look at NVIDIA. Here's SMH right there. So you can give me any other semi names, but the reason why I don't want to buy this garbage, look at this. Now, this is what AMD is. This is what SMH is. Look how many months it is going to take for this AMD to close the spread now. AMD was never a good bet on AI name, period, and is still not. Okay. people who wants to, I mean, again, it's your choice. You think that the bottom is in and you try, but it's just, it is a very weak stock. They just make a cheaper version of whatever their servers and things like this. I mean, these companies are not buying cheap stuff. Okay. Amazon and Google and companies like this, they're not buying cheap stuff to run their model. They're looking for NVIDIA, the quality product. I don't know if you remember that. I don't know if it was an Amazon or if it was a Google or something. It laid it out like, yeah, we're not interested in buying AMD. You have a company saying that. This is for video for kids, those video game graphic cards that they use for making those homemade, those customize their graphic card. Those that AMD is good for those kids. It doesn't have that what you get here compared to this. It's day and night. Look where Nvidia is, how Nvidia is trailing to the upside, and look how AMD is going. And everybody's selling you off on a concept of an AI, this and that. You gotta I'm more interested in buying the strength, not this kind of a what TSM is let's do I can show you what TSM is. This is the top names, TSM, Broadcom, and Nvidia. Those are the three names. That's it. There's nothing that just there you go. So let's make this one as pick a different color. Oops. Look. Really? Oh, there. Let's make this thing as a brown. You see, the point is NVIDIA, Taiwan Semiconductor, and Broadcom. I don't have Broadcom here because of this is the only three stocks, okay, has the relative strength when it comes to an AI. The biggest market cap company compared to this kind of a weak stick. If you wanted to play a bounce for a couple points, that's a different thing. But just imagine this spread, one is going to close. It could take several years now. This AMD already has a lower yearly bar anyway. So this stock is toast for this year. It's not gonna have that much upside anyways. Once you have a yearly lower bar, your your chances for the up I mean your upside is difficult. Very hard to fight the upside. So this is why I okay, it's fine. We can trade Nvidia again. It's not a big deal. It's not going anywhere. But that's why I took the Broadcom trade. It came right to that number I was watching, and then the signal triggered pretty strong. Took the trade. So again, I'm not wasting my time on AMD. It's just garbage company to me, to be honest. It was AMD had his boom here. Okay, as you can see it here. AMD was outperforming the ETF, which is SMH, TSM, and NVIDIA from here. That was back in what 2023. Went all the way back here. Then from here, you see this divergence here. That's where TSM and NVIDIA made the divergence with AMD. And then it just went up. NVIDIA just, sorry, the AMD just couldn't catch up. That's where it just fails. You always look for the divergence when those two stocks, when they cross each other. One just gonna go up north and one is coming down south. It just, it's a very weak stock. If I want to bet or I want to buy something, I'll buy the strength. I'm not dying to buy this nightmare because I want to pick something on the bottom and thinking like this thing is gonna go up like this. No. I mean, if you have the stomach to hold the trade for the next 10 years, that's a different thing. Nobody can hold the trade for 10 years. Um, Here's growth versus value. This market, the cues, large, what it's doing right now, meaning that we just looked at them pretty much sideways for a long time now. Your rotation is actually for the growth is sitting in a lagging quadrant.
Well,
Ye-
what's in the value
Your
in
value stocks. I did a
yeah, what's in the value index?
your Dow 30 stocks, and most of them are value. Your There's tons of not pep like Pepsi is one, Coke, all these are all value stocks. This you could get up a list um of I mean can get up I don't know what I do. I think I deleted it. I made the list of those um top 10 market the value index. The value index, you have JP Morgan Chase, you have Walmart, United Healthcare, IBM, Wells Fargo, Abbott, Home Depot, Qualcomm, and Goldman Sachs. These are your top leaders that has the most weight on the value stock. So I have a JP Morgan and Goldman Sachs. Those are the financials. Qualcomm. Qualcomm took a hit on earnings. Home Depot, Abbott, Wells Fargo, and other. So your banks or banking sectors are IBM. IBM is, I don't know why is that value should be mostly in a blue chip. Healthcare Group, United Healthcare, and Walmart. And if you wanted to go into a smaller um, um, market caps, you could look for those Pepsi and the Coke and all these other stocks. They're into those value. I'll make the list here. I'll send you one. I don't know what I did with it. I think I had them somewhere in the folder. I think probably deleted it. Uh, oh, I cleaned up a lot of stuff this year. So the growth, if I take this rotation from here, I will make a case of this using these two that we just talked about. Yes, we have in our whipsaws back and forth, but we're doing okay. Shouldn't be. We have a decent month last month. I mean, we'll we'll trade more. I don't. I'm not a. everyday trading guy. Don't get just you have to get the thing out of your head. It's just not gonna happen. It's just too much risk. Don't jump from one trade to another. That's just it's just being desperate. So if whatever is going on here, 1 2 1 2 or a triangle, or we still got more time to chew, this is gonna improve. Okay, because this thing is not going this way. It's gonna go up. So that's what I'm saying, that the market doesn't have the the bearish, like, for me to, like, I don't know how to put it, like, I like, if you put all things together, it doesn't give me that answer like, yes, I should start looking something heavy to the downside. It will show me. I know there's things that I track on a daily basis. I don't have those signs. Swings are up, rotations are here, they're gonna improve. So I should be looking to buy some weakness. If I'm buying something here looking to improve, I mean, I would expect the same thing happen here as well, right? So just this is we can do. This is going from last year. I can do year to date. Oh, this is it's gonna bring it really small. Last month. Okay, here's year to date. So we can just track it from here. We probably went 1 month so far. Yeah, just leave it like this. So we have year to date. See, growth is still good. Here's an S&P 500. And here's your value index. So you should look for, I mean, we're gonna I'm gonna buy. I'm not gonna, like, there's one thing I don't like to do in trading and investing is to rush things. Okay, when you're rushing things, you're gonna make a lot of mistakes. Those mistakes is gonna cost you money. I want to balance it out things. I want to trade what I trade, and then at the same time trying to see what I could buy or leave it for some time. But you can't just jump on 5 different positions all in one single week. Okay, well, then then you just sit on you gotta leave some cash in case if things rolls over, that you could potentially buy some leaps, buy some, you have to look for those stocks. I have a year to go. I'm not, you can't just, it's the trade costs money. So you can't just randomly throw risk, like, oh, one guy is shorting Tesla, one guy is buying Tesla. Oh, should I do this? Should I, I mean, you don't know what the heck that person is doing. He might be losing 3 different trades on a side. He's trying to see what he can make up his loss. No, but you don't know that. Don't just look at, like, one person hit this and that. You have to take patience, just go through it and see what we could find and what looks good and where we could make a bet. I mean, doesn't mean that every single trade will play out. We're gonna have a loss. Just That's just a part of the game, you know. But I'm not worried about it. I'm just trading is fun. I want to keep it that way. It's not a punishment that I gotta take every single day. People just uh, don't rush. Wait, we'll make the year. Okay. My goal is to hit a 50% ROI. Okay. Right. This year. I did 82 plus percent last year. I have a goal of 50 this year. Just it's a reasonable, nothing too crazy. I don't know how market is gonna go up this year, but I'm gonna whatever it takes, I'm gonna get to 50 at least. It's gonna at least if I can double or outperform S&P by Christmas, I'm super happy. I did my job for the year. So it's a lot of work. So I mean, I'll do the work. That's not a problem. Um, what is that? What's gonna show Bitcoin? Just nothing. I don't understand one thing about Bitcoin is you have a Bitcoin that goes up 3,000 points, right? But then the coin and MSTR moves only like 5 points. I don't understand the logic. Like, how does it even work? Like even yesterday, the coin just keep rejecting at that 208. I'm just looking. I was like, come on, break this level because the 210. Sorry, what on the print was 210 or something. Let's see. Yeah, 280. I keep saying like, come on, break the 280. It's just it's got to be a clear shot to 288. But just keep rejecting. It just made 3, 4 attempts, but it's okay. See if it could make a move back up. It would be nice. Let's see, we could get to yeah 284 to 288. So we'll see. Um, Russell Top 50 index. These are the 50 stocks. Okay. Um, all the big names we all talk about. These are the year to date. How they do? Who's the one is leading? Well, GE Aerospace, 23%. Meta, 22. Philip Morris got a monster pop on earnings. I don't know if you noticed that. JP Morgan, 15. Wells, 14. Abbott, 14. So a lot of these are earning pop. Costco, Eli Lilly, 13. Walmart, this and that. So Qualcomm is doing actually good. You see, because of the value stock. That's what's basically considered the value. Accenture, Bank of America, AbbVie, Johnson Johnson, Chevron, Home Depot right there, Amazon 4.5. It gave a chunk back. McDonald turned around the other day. Um, this is what I was betting on. McDonald's right there, right here. So it's been sitting here when I bought them. I was like, okay, fine, I'll give some time. This sucker took so much time last month, and then we sold off quite a bit as so where McDonald's gonna run. And I finally made that move up, but just so short on time. But they have earnings on Monday morning, so hopefully you'll be okay. So it looks good. So it just if it could break that 300 mark, then McDonald can get a nice pop to the upside. Worst case, if it fails, I mean, I don't know. I don't know how to predict these earnings. You got Pepsi. There's a weakening. This is the box that I because you could manually draw. I have this box here. Just looking something out. I don't want to try to fight something closer to the benchmark. Need to find alpha. I played this, as you all know. NVIDIA is here. Look at where NVIDIA is in the 50, all the way down here, but look how far it is from the benchmark. Out of all the 50 stocks. Nvidia is gonna turn around. It's gonna have a wild move to the upside. So does the Broadcom. You see, like how Broadcom was here when I saw the hook right there. I took that trade not from this because I know still got plenty of time to go to the upside. I was I have my signal, so I was came and I was like, come on, let's buy it, and then it just literally went up. Um, Caterpillar is weakening. Applied, no. Chevron, no. You see, there's nothing really here for me to buy at the moment. Tesla is, you see, now look at this rotation right there. Tesla is weak. I can understand. Tesla was forming a hook right there like this. So this is the last few days. This is Friday. This was Thursday. This was Wednesday. This was Tuesday. So I had them at 4 bars. It's gonna turn around, but it's gonna take some time. So look at AMD, Broadcom, Texas Instrument right now is a little bit trying to do this. NVIDIA is all the way here down now. I don't want to touch this. You see, there's nothing really here for me to. I'm watching, but this we're gonna grab them. See, Microsoft is coming back down here as well. As a matter of fact, look at Microsoft, look at Apple. Look at these two stocks. That's not a buy right there. Microsoft stock is a mess. Look at this. Talk about some sort of a nasty looking triangle or something right there. I don't even know what the heck is going on here, to be honest. I have them as a triangle for now. It's not even a valid triangle anymore. This E wave went below the C. Now we have to just open up even more. I don't know what is this with I want to trade Microsoft, but just there's nothing here. This this thing is gonna kill you with options to trade this kind of a price action. You need at least 8 swings from the low. This was a nice move here. If this would have held here and would made a move back up, that Microsoft would ready to go. But look what the earning gap came. So this is the AI name as well, right? That's what I'm saying. This just is because we just looked at the SMH, right? It's some it's a mess. Semis is a mess right now. I think all the air is just coming off from all these names. AI story is I think is dead. I don't know. Microsoft is not moving because they're spending all the money right now, or what the story is. But you can you can own the stock. You can't trade this kind of price action. 410, yeah, nice. I mean, it's gonna go, but you're looking at a stock from July, right, of 2024. It's the same high that we just looked it up on semis, SMH as well, right? Look at the SMH and look at the Microsoft. Same thing. Because Microsoft is the one who's spending so much money since last year, billions of dollars, right? It's a very important stock. When Microsoft's down, it's gonna drag every cloud name or well, I mean, you name it. But at the same time, there's nothing bearish here. If this would be some sort of a 5 wave that you wanted to count, if this is gonna be some sort of a second wave, you would have another, secondary decline. But you can't put a 2 here. So you have a 5 wave here and you have this kind of a 2. Look at this compared to this mighty wave 2. It just doesn't even make sense. It doesn't even look good. It's just a plain sideways chop. I mean, I don't know. It's been a long time I traded Microsoft. There's nothing here for me to trade, to be honest. I'm not gonna fight my life over this sideways triangle. If you want to buy it, because remember, triangles are in fourth waves. If this is the case, you have a confirmed fifth wave coming whenever this thing is gonna complete. So whatever the SMH is doing, I think because they both had the same high ever since the price is about the same. If you can just literally put it side by side, it's identical, same chart. All right. If they're gonna go together.
So Mo, what about selling Microsoft
How
put
can you?
credit spread?
What do you want to sell? You want to make some long dated iron condor or something? You can do those.
Yeah, because it's clearly in the range bound, and it looks like it's going to take a while to
Yeah.
get out of it.
You could do iron condor. You can do those.
How do you structure that?
You gotta sell something up here. Let me see. Well, I need to have a right wave count, but I'm making a case of a triangle here, but it could be just some sort of a complex or whatever. You know, we could just do this as well because this third wave has already the external fourth wave already has 123.6 both ended here. Okay, if I go 4 by 2 and 4 by 3, so both ends here. And the question is, do I put 4 here? So if I do that, let's do this. Let's put a 4 here. And now we're going to have to see like, okay, how we can go up in 5. Okay, where are we going to put 1 here now? So this is all a 4, right? Typical downside retracements here. Oops, made it something. 23.6, and that's your 100%. So that's your 4 versus 2 and 4 versus 3. So we found the support, managed to bounce back up pretty strong up till here. Then we became back, then made. So now the question is like, okay, how if this is 4, which is so directional, and 4 never ends like this, okay? On any um, once you will have a move all the way back up in a third on a third wave, 4 will never end this way. Just one direction for a couple days or so, week or two, and then we're just done. No, 4 is gonna torture the hell out of you for a long time before it's gonna make its way up. That's exactly what is going on here right now. This is why I don't want to put a 4 here. You don't rally this much up. Boy. And, you don't rally this much up in third, and then you just get done with this. This is some sort of a fourth wave triangle for sure. That's, I mean, not for sure. Like, it's a fourth wave. That's a 2022 low, the bear market low. I mean, if this it's a similar wave count to QQQ because I know it follows the same wave count. This stock just mirrors Qs. Three versus one. Here's your four versus three. Up in five. So if I can do if I put a four here, okay, let's take a look. How are we gonna count one here? This is a three-way move. We need five. This is why I'm saying this four is not here. Because any low will confirm when you have this. You need eight swings. One, two, three, four, five, A, B, C. Eight swings. That makes the trend. Five doesn't mean five waves never makes a trend. Consider as a trend wave, but that doesn't mean anything on the wave count. Five wave decline can be easily labeled as an ABC. What's so difficult about here? A, B, and C. So if you want to go to a triangle route, I have to price this one out. Or some sort of this. Or you can just do whatever WXY, whatever you want to do, it doesn't matter. Fourth wave is always a wild guess. That's what that's what most people stop doing Elliott wave when they go into a fourth wave. Let's screw that. Well, what other technicals you want to do that you're gonna? It's gonna be the same thing. If you don't want to label this, and if you just want to look at a blank chart, okay. And if I throw Gann swings on it, or if you want to use any other moving average or any other indicator or whatever, what do you think you're gonna get out of this? Same thing. If the one if an Elliott will tell you if it's a sideways distribution phase, okay. So how else you want to fight this? Or then people say, "Oh, Elliott is just BS," because the labels are keep changing. Okay, well then, how your technicals are not changing? Well, there just stays firm. I mean, what is the strategy out there in the market? Okay, that has a 100% success rate. There is none. You know that, and I know it. That never exist, and it never will exist. If that would be the case, would be just one simple indicator for everybody, and oh, it will make everybody's life easy. But it's the same price. You're just trying to analyze it from three, four different ways. But then every trader has his own style of trading. I mean, if you look at them, okay, here's your C versus A. Okay, so where we could find a potential support for this. Triangles are very tricky here. So this is going to be your zone between 404 and 413. Okay, so here you have this. Then you need D. Then you need another E to complete a full triangle. And what do you think, how long do you think that thing is going to take? Several weeks. It's a 6 hour time frame I'm looking at. One bot is 6 hours. One bot is for one trading day. 6.5, what is it? Yeah, it's a 6.5 hour session. So 6 hours is one bar, just similar to a daily bar. Um, so now I could price one out. What you could do is if you want to do an item, but it all depends on how much it's gonna cost to price one out. You could you could sell something here and buy something here. So you could do, let's see, hang on. So we have 456 here. We have 385 here. Okay. Stock is at what, 410. So we have 410 and then downside is 25. So it's a 25 points to the downside. So the 25 points to the downside puts 4, 3. Into 10 points here. So basically you sell. So you sell the 395. You buy the 385. So you have, I'm just gonna write one here. One, you sell 395. You buy 385. That gives you a 10-point spread. Then you go up. You could do, you could sell for, you could do 455 or 460, doesn't matter. You sell it here again, and then 55. So then you buy, this was a 10 points. Yeah, so you buy the 465. So that becomes your iron condor. So now if the price managed to stays here, don't get hit these two, you collect all the credit that you will receive up front.
So what expression?
I have to price one out, so you have to give me some. I need I'm
Okay.
just guessing here. I need to actual see the the sorry, option chain to see how how it looks. And then I could adjust. Do you want to trade iron condor? Is
Yeah,
some
I do.
Yeah. I mean it suck.
Like it's like this is like so boring just looking at this market, and then I want to have some income opportunity just rather than sitting on the sideline.
Okay. I'll see when we get off from here, and I'll um I'll see if I could price one. But I'm gonna now keep in mind that you're receiving credit, so that they're gonna suck up that capital out of your account. It
Yeah,
depends on the
sure.
stock as
Yeah,
well, but
you
you
have to have a
just,
margin account.
huh?
Yeah, you have to have a margin account to do this.
Correct, correct. Yeah, just depends how much is it. If it's a $4 credit that you're receiving or three, I don't know. I need to adjust those. And if you, I mean, wants to do $700 premium, the credit, or we can just adjust that. So I'll look it up. Just send me remind me after the close or so.
Okay,
I'm just guessing you. Yeah, iron condors are good, but I mean, I've done it many, many times on S&P, but I don't really hold them because the S&P is very expensive when it comes to an iron condor. Um, you are you're talking almost like a one standard deviation move of an iron condor and S&P is gonna cost you probably like 40 to $45,000 of a margin. I mean, you're talking close to like 900 or $1,000 profit, the credit that you receive. So that's S&P. I mean, you're talking 6,000 price as well. So it's not going to be cheap. It's not going to be cheap. So it is definitely a great way to generate some income by just selling premiums. But some of them, they suck up a lot of margin, and then you go out 3 weeks into a trade to collect $1,000 credit, but you are tied, like then you have $40,000 tied up to that trade, you know? But at the same time, you could possibly find a good potential trade. You can just get done with it the next day, or, every trade is different. So it just, I mean, if you think like that covered calls or selling premiums is the only way. I mean, yeah, I mean, it is one of the ways, not the only way. But you just like, I like covered calls, don't get me wrong, but I just hate to give the upside. That's basically what you're doing. Every time when you selling premiums, okay, you're just giving up all the upside. Just keep that thing in mind. Those are when you sell premiums, you basically are going delta neutral, theta positive. Okay, all you're trying to do is just like you're trying to get to as like the passage of time, trying to get close as possible to your expiration is for you to collect the entire credit. It's because those premiums are decaying every single day, right? Closer and closer to getting to the expiration. But you've given up that upside, but you just killing that time just to receive that $400-500 worth of a credit. So same thing with this iron condor, everything with the calendar spreads, or But then there's many ways like diagonals and stuff. They're different, but I love diagonals the most. They're diagonals and butterflies are really really good. But again, every trade is different. You know, I try to eliminate time decay as much as possible. I want to go up. I'll play the upside move, whatever the direction that I'm willing to go. But I just want to. But my every time when I'm trying to set up a trade, my always focus is on just trying to get rid of this time decay as much as possible. If I will have like a 50 delta trade or 60 delta trade, I'll try to keep that time less like $4 or $5 per day. I'm okay with that. Once you will have your time decay that goes up to that 25, 30, $35 per day, that'll kill you over in a couple of days if the stock is not going to move. And this is why most people who are trading single calls and stuff, they're the one who losing. It's not they're wrong on the direction of the stock. It's the time that is costing them each day is to hold those premiums. Okay, this is what every single day you're paying for it. You want to go from here to here. You spend $10, $1,000, right? You pay $10, it's 1,000. So you want to go from here, and now this carries a 45 deltas, but you have roughly, let's say, 20 negative theta per day. and you took a start right from here from 10. If from 10 the premium goes up to 11 the same day, you close the trade, you good. Now, if you have a target that sets here on the price on a chart that you're taking a trade, you can't just blindly trade, right? You gotta have to have a plan. Where are you going? Where is your target? So let's say you have a 180 target on a price, and this price right there is 150. So you targeting 180, strike the price right now is 150, 60, 70, 80. That's a 30-point difference, right? Between from here to here. That's where you have your target set on 130, 180. You pay $10 for one contract to go up to this, and you have 45 deltas. So from 45 deltas, 35 simple math is what? 45 times 30 is $1,350. Okay. So that is so you spend $10,000. You have a 45 deltas. You're trying to catch a 30-point move. It's going to pay you $1,350. So your payout is to reach to this point is 1,350. But this is your reward. This is what you paid. Now, in order to get to your reward, it's costing you $20 per day to hold this $10 premium. Each day, okay, you go up. The bell rings. There's nothing you can do. You're gonna close. You cannot open a trade. You're gonna close a trade, right? You have $20. So let's say you went up $150. You say like, okay, well, my target is 180. I'm going to hold my premiums. Then the next day, as soon as the bell rings, and if the stock even open close, your balance is going to decrease. It's going to go down to 130. That 20 right there is going to hit you overnight. The next day. Now you're taking a start from 130. Even the fact that the price went up here to 200. So from 150 went up to 200 minus the 120 from there. Your original balance will be 180, not 200. You have to pay this. It doesn't matter. Each day, 1, 2, 3, 4. Now you take 5 days with 20. That's what's costing you to the premium that you're holding, $100. So now you made a move back here. It took 5 days for you to get to a 300. But on the screen for 5 days, you have to pay this $100. It's going to show you $200 profit. You have to pay this $100 to get to 300. This is what everybody's fighting. You're directional. You want to go up. You're buying something here. Okay, let's do this on a chart. You buy something here. Now your goal is to go up. But you want this move to happen as quick and fast as it can. It's be better for you. Longer and longer is going to take, more and more is going to cost you. To that $10 premium that you just bought, the reward is there. Don't get it wrong. The reward is there. But that reward is going to have a lot of time price that is built into it. So when you have $1,000 premium costing you this per day, I can make a spread. I can buy a call here at 410. Okay. And I can sell one. Okay. Against this one at 430. So now I have a 20. So I'm long one. I sold one. That's the vertical spread. So 410 is the price at the money. So I'm going to be right at the money. So when you're going to be right at the money, what do you think is going to happen to the time decay? Probably going to go down to two to $3 per day. Not even on one contract. $2, give or take. Because the strike that you have right there at the money has more intrinsic value. The stock, the option price, which is out of the money, does have extrinsic value. You don't care about this. You want to protect this. That's what you long. This is the one that you want have this to decay over time to get here. But you want to hold this. You need to bring this one into the money. Keep it in the money. The premium, what you have here of that 430 that will decay is your profit by the time it's going to reach your mark to the upside. But the point is that you're going up here and you're going up here. This one is costing you $2. This one is costing you $20. So and this spread right there is going to cost you probably $350, or probably it's going to cost you $4. So you have to trade probably like 2 to 3 contracts in order to spend $1,000 to keep it as 1,000 here and 1,000 here, and then you make a bet to the upside. So you are a smart person. Okay, I'm pretty sure you're pretty smart. Which one makes more sense? Because this one, which has a higher delta of a 40, or would you take this one with a lower delta of 20? So if this move happens as quick as it can, well, you don't know that. The reward is there. If this move happens at the same time to the upside, you make a little bit, you make half the money compared to this side. But you pay fraction of the time compared to this. That's the difference. So you look at your odds. Which one makes more sense? If you really want to carry 40 deltas, you can do the same thing here as well. Now, instead of going with 4 contracts, you can do 5 contracts. You can adjust your vertical spread. That would cost you a little bit more than 1,000. That really doesn't mean anything, but it's going to give you the same delta of 40. It's not about the cost now. It's about how much delta that you're trying to compound over time to your trade. Learn this, how to compound deltas on your options. That's the key. It's not about the cost of the premium that you're paying, because you know that 1 point is going to move. That's what is going to pay you. $1. 1 point. So from 410 to 411, it makes you 40. You make $40. If it goes down 408, you lose $40, right? So the rest is this, because you're fighting that time. You don't know that when is the expected move is coming, but we're just hoping that just move that happens as just quick as it can. So I'm not going to have to pay that much time each day to hold what I'm holding. Now I'll just rather just reach to my destination, to my target. Well, that's trading. You're trying to time the move. You put yourself a window. This is the expected time that I am buying for 30 days, that I want this stock to reach from 110 to 456 in the next 1 month. So from here to here, 456. So you're betting almost 50-point move to the upside. Okay, let's do this. We don't know what's going to happen here. It's blank. So this 15-point move took, it's a 6 hour, almost 55 days. Okay, you can look at that way as well. 55 bars. So 55 bars of 1 6 hour. So each session, one session, right? So it took 55 days. So if that it was your target of whatever that you want to do, you can do 450 target. Doesn't matter. It ends here, right to this 450 mark. It's 51. So you bought yourself. You paid for the premium $30. Sorry, for 30 days. That's 1 month. But it took close to 2 months for a roughly a 45, 50 point move. You just you can just literally add an extra 1 month of your time decay to the premium that you have. You almost toast. So it's all about, like when I enter a trade, right? I always tell you, set your price alert at this price. I mean, I always tell you, I hope, I mean, like that's what I do. But I will never ever enter a trade if I don't have my target set. I mean, but now how long is going to get there? Well, I don't know that. But betting on the spread just to eliminate the time, I think is the smartest way to trade. If it's a matter of carrying 50 deltas, 60 deltas, 75 delta, I can adjust my trade. That is not a problem for me. But I always like I set what was that? Give you a Broadcom, right? I set a target at 235 on that stock, and the stock moved pretty quick. We entered a trade one day and moved the next day. That was it happens. There's a lot of. It's not the first time I've done it. There's a lot of times we have taken a lot of trades that just like instantly move. But it hit my target, and I got out of the trade because my targets are set on fibs that I run based on 3 different time frames. Okay, this is the zone that I'm looking for. This is where I will set my target. If my target hit, I'm out. If the stock can go up another 3, 4, 5, 6, 7 points, I'm okay with that. I'm good. My target hit, I'm out of the trade. That's it. It was a good trade, played out well. Let's move on to the next one. That's how I see things. I don't say like, oh, why did I close that trade? I mean, I should have held it. I would have made this much because it went up another. Well, you don't know that that is gonna go up that much. Okay, we hit. Take a look at Broadcom. Watch. This is a different here because I did. That's where I set my target at 235. Exact. And the high was 237. It closed yesterday at 224. So I was looking for not that far. I know the 78.66 hidden. And you have this kind of a huge gap from that Monday sell off, and the market does, Broadcom does manage to make a move higher. I was like, you're not gonna just rip right back up. And plus, you have this thing sitting here. So it's what I'm on the swings that I run. It has this is what I have the 235. That's what I set it up. I was like, okay, fine. And we just basically played a move from I believe here or here. Here, I believe. And it gapped up, backed off, and then just made another one more attempt just to get to the 235. Broadcom works really good with especially with swings fib. Just remember that. It's a very good stock to trade with swing, but I know a lot of you guys don't know how to run swings, but it's okay. It works really good with swings. So we'll see when I keep an eye on it and see if we can catch another one. I like to see if Broadcom can just make his way up, but not until it breaks this. It's gonna be a hurdle right there. This is gonna be it's a nasty drop. I mean, this was the earning move that we played. Remember on the earnings? That was even a gift that I posted on Twitter as well. Yeah, we gapped up here. We had a trade open here. That was a nice, beautiful payout. Had a huge, that's the earning gap. Then it would just keep on ripping. Backed off this and this kind of consolidate. Just went all the way back up here. So I don't know. So we'll see what happens here. Trying to go as a 1-2, but I have those swings one. That was in this one. Oh boy. Same thing. Split stock. Jesus. I'm gonna every time I gotta expand this thing. Just to it's nice. I mean looks it's okay. I mean it's you know, three versus one is still more than 100% is okay. It's kind of a little tough. It's okay. Count looks fine. If he can just make his way up to the upside, it'll be nice. I know this is a huge up, two, three. I hope this is all four. Yeah, you gotta break this 7, 8.6 to to expect more upside to take out this 251. Oh, there's your decision mark right there. Um, yeah, there's not a AMD. I don't want to touch him. It's horrible. Broadcom, we're gonna watch, see if we could, if it backing off, we will see if we could try to look for. I don't know. I'll decide. Either I played this. I might hit in the video. They have an earnings coming up as well, so um, Apple is up. Rest of the stocks are already up here. Johnson made it a move up. Which one is coming down? See, Oracle is weakening. ExxonMobil's too close. Pfizer, Microsoft now. Um, Pepsi now. Chevron, Caterpillar, Applied. You see, banks are doing okay. Home Depot now. See, Qualcomm. This. See, financials are. JP Morgan made a reverse hook. So does the Wells Fargo. Amazon now is coming down because of the earnings. See, Mickey Mouse. Horizon, McDonald's. This is, man, if I would have made cash, that thing would be, I mean, it's okay on what it is. Not a, not $1,000 loser, that's for sure. I'd rather just be flat than $1,000 loser or two. It's okay. Um, Let's do, let me see, where my other screen? This. That's the one that I use the most. That's the ones that actually, you want to find trades or you want to ride stocks that has alpha. Just remember this thing. You want to be an option expert or option guru, you look for a stock that has the most alpha. Okay? Because those are because if you are um, a directional trader, that if you like, if you're selling premiums, you're basically more of a range bound, like a delta neutral theta positive guy. Okay? Because you just want to sell premium, collect the money. Right? You can do that. If you're looking for more spreads, vertical spreads, however you want to structure your spread, you can do a diagonal, whichever way you want to do it. Or you just want to buy single calls and things like this. You want to focus more on stocks that have high ATR, average to range, and the stocks that has more alpha. Okay. How do you find alpha? RRG is going to show you that. Okay, because this the universe of all these stocks. And the call it like galaxy of the star that just moving, circling around the main benchmark all the time. So these are the top. These are the S&P 100. Hang on, 100 stocks. Isn't what these are 100 stocks, meaning that S&P has 500 and a 100 index, right? I mean, it has 1,000 and a 1,500 as well. So we're not going there. Let's focus on top 10 leaders, top 100 leaders. So when you go toward 10th decile, they had it by a distance. Okay. What it means that there are further away from the benchmark. So you want to find a stocks to trade. They are in the 10th, 9th, 8th, kind of 7th decile. Those are the trades going to have the most alpha, meaning there's going to have a much bigger expected move. So out of all the 100 stocks, these are the only stocks are sitting in 10th decile. So now if you notice, and if you're going to go to the chart, you're going to see that these stocks has made the biggest move either from the low or whatever they were but you're going to see the biggest move on these particular stocks compared to the other ones. Okay? So Nvidia, which rallied from 113 all the way to 130, is because of this. Because it's so far away from the benchmark. Okay, so it's taken a wider rotation. Wider the rotation plays, more and more money you're gonna make on that stock. So the stocks are in the 10th decile out of 100 index is this. These are UPS and this. So UPS, which got hit with earnings. If you go to CVS, GE is the one that's leading the S&P right now. Anyways, that's the strongest stock right now in the S&P fight. And in S&P, I don't know about the 500, but the 100 for sure. Abbott is a huge move after earnings. Netflix, we already know, went up to that 1,000 mark, just been dancing around there. Meta is there. Meta is up there. Starbucks and IBM. IBM had a big pop on earnings as well, remember? So it shows you that this RRG will confirm those expected move that you're seeing in the market of why the stock pops so much. But you can't time every one move, but this is what it shows you only the alpha or the momentum of the stock, what you're trying to find, what you're looking for. Now, what kind of expected move we can get, then that's where Elliott comes into a play, swing comes into a play, That's when the fib comes into play. So you could have a one way of looking at a stock, thinking like, okay, yes, I could buy something here. It has quite a bit of alpha that I could be able to get if I will have enough time in my hand, right? And then I need more to give me like, okay, hey, what kind of upside what I'm looking for if I'm willing to dive into this stock. So that's where the charting skill is going to come into a place. So you gotta have to put all things together to structure a trade. You can't just randomly buy stuff. One guy is like, I'm buying and I'm selling. That's not trading. That's freaking gambling. You're just trying to see where you're gonna get lucky. Because the screen is showing you this that you would have this the stock that you are going in right now is really willing to have that much expected move. No, look, here's your 10th first decile. These are the suckers are sitting like literally close to the benchmark. These stocks not going anywhere. These are the worst one to bet on an options. With the Google, not exactly Google because Google just reported earnings. Eliminate the earnings. I'm just talking about trading sessions, right? You don't want to buy none of these stocks. Well, I have an AMT, I know, but that's why I just had them only two. I like that chart that I'm trading, so try to see. Looks good. I mean, I have the wedge that I showed you, I believe, on that trade. I'm willing to make trying to see if we could make a move to the upside. Um, we want to ignore this. We're gonna go here. Okay. The video I already know. Fine. Let's go to ninth. We have Tesla, AMD, Broadcom, Lockheed Martin, and General Motors. Pay attention to these stocks. I'm not worried about Comcast. So this AMD, which I know taken all the beating in the world, it's will be due for a move up. I mean, I don't know. I mean, you have to convince me really good to buy this. I don't know. I just hate that stupid company. That's all. So I will love to play. I will play this. I don't know if I'm gonna play this. I'll play Broadcom again. Okay. So Tesla, we're gonna look at them in a second, is sitting in the ninth decile. So it's very far away from the benchmark. So pay attention to these stocks. These are the leaders that you have to pay attention to. And then we're gonna have to make a wave count, make a swing, see where the potential support is, where the stock will at least stop the bleeding, take a day or two to consolidate to secure a support. And then from there, we could expect thinking like, okay, yeah, the price can recover from here. Now we have momentum is picking up. Right now, the momentum is definitely weak. So we need to be patient or try to build up a new position. Eighth, only TXN. See, a lot of them here, the move is almost done, right? Because now keep in mind that a lot of these stocks has already reported earnings, so they're showing a little bit of a wild move to the upside because of the earnings. But my focus is here because you want to buy something low, you don't want to buy something high to see that if a swing turns up or if the wave count from 1 2 rally to the upside. So I'm trying to go from here because this one eventually is going to come back down here anyways. So I'm not gonna fight my life over these moves that's already been done. Try to chase those ups, chase that upside. That eventually they're gonna be start weakening like this, like MDT right there. So you see, it made a high here when the rotation went all the way back up, which is this entire move. And now day by day, I can move this line here, and you will see the rotation will move here. So each day, see. Now keep in mind, watch this one, MDT. I'm gonna move it day by day. See, it's weakening. So this decline is gonna show you here for sure. But that doesn't mean that it's gonna come all the way back here. It can come down here. It can just make a reverse hook back to the upside. It can do that, but they reverse really sharp. Seventh is PayPal, which got hit with earnings, I believe. Oh, this is garbage. FedEx. So that's the so now we have UPS, which is down because of the earnings, and we have FedEx. So FedEx is ugly chart. So can range bound with these gaps after gaps on earnings. It's just unbelievable how they look at this. Earning gap down here, earning gap up here, all the way down, earning gap up here, earning gap down. You see? It's crazy how the stock trades. It's a mess. I love to trade FedEx, but mm-mm. You can't. You're just chasing these gaps up and down. This one got filled here. Open up another one. Fill this one. Open another one. Eventually fill this one all the way down here. Then rallied all the way back up. You got two gaps here now to the downside. So hopefully, what swing is this in? Ah, it failed an 11th swing. See, it made a higher high here above this swing high, but then at the same time, it took a picture just too range bound. I can tell. I don't even need this swing. I can just look at the price. I can tell you this is ugly chart. It's very difficult to trade. This kind of a sixth is okay. They got a kitty cat here and I got Apple here. I think Apple kind of improved. I think Apple was probably like in a kind of a little close. Apple is still good. Here's Qualcomm, UNP, nah, Caterpillar, something we can keep an eye on. Yeah, you see, it's just not. There's just their stocks there has made some move, but at the same time, I mean, we just looked at them. I mean, there more stocks are weakening than than actually, um, we could do Nasdaq 100. Oh boy. So these are Nasdaq 100 stocks. S&P has a 100, Nasdaq 100. So on this one here, you're gonna have a lot of those are there in 100, but then we'll include several other tech stocks in there as well. So you got this um, Monster Beverage company right there. Yeah, yeah. I bought those two leaps to take out the 240 upside. Yeah, I update everything. I keep a log of all the trades. Yeah, I bought two leaps for with the shares that I have. Yeah, because IWM has a double top at 240. Keep that thing in mind. Or just so I don't know. Oh my God, all year. I mean, I don't even updated this. I'm not doing a lot of Elliott wave, so just I'm trying to save myself some time. I mean, just to if I can run a swing that would gives me the same fib extension, like the target to the upside. I mean, I don't need a wave count to be honest. I can just count a blank chart in my head. I know some of you guys want to see all these, me to sit here and do all these labeling and everything, but I'll do it when I have time. I just don't jump on Elliott all the time. I have a lot of work. So we have a double top here. This was the all-time high was back on November 5th of 2021, all the way down here to this was the bear market low of 2022. So this was the entire bear market. Three-way choppy little bounce, another decline all the way back down here. When the rates got spiked up, made a double bottom, whatever, double, triple bottom here. And then from here, trying to count as a 1-2-1-2 count. So I'm looking to see if we can break this 240. Um, where are we at in the wave count? I mean, we had this decline here, managed to rally up, back off, just dealing with the same chop like S&P and Qs now. Qs are just sideways. S&P is all over the place. So just trying to see if we could. I'm long shares from here since last year. Um, and then I just bought those two leave. Worst case, if we have a bit of a leg down here, I can buy one more, average it out, and see if we can get there by Christmas time or something. Yeah, IWM, I mean, the small caps are starting to take a bit of a breather with lower rates, but at the same time, it's just like, I don't know what to make out of this. Seriously, just back and forth whipsaws. More and more you look at a price on a bigger time frame, it's just starting to show totally different we picture, everybody just wants to look at a straight decline to the downside. Well, you don't, yeah, but you don't actually see what the heck is going on here. Like, look at this entire move up compared to this price action. Can you tell the difference? Look at this and look at this. So you don't have to label anything, just simply draw channels. You have a rising channel here and you have a sideways channel here. So what do you think is going on here? You know, but this is bearish. So this is bearish. This is bullish. Okay. Okay. I know. Hey, every trader in the world is different. There's a reason for it, right? Cannot be the same. Last to least, Tesla. Tesla is, we all know where it is on the on RRG, sitting in a lagging quadrant, right? It is technically confirmed second wave is in play here. There is no denial there. I had a pretty like 2021 high 414, years and years of back and forth. If you don't want to label anything, you just simply just go like this. It's the same thing. It is a round bottom. The worst case is that if Tesla happened to form some sort of a shoulder here, that's one possibility. If you just want to look at it as a pattern, not with Elliott is not gonna draw those patterns for you. If you just want to look at a simple pattern of this to expect something to happen like this, it's just pretty much the same way. So let's put this thing on a side. We need this. So a flat to a zigzag to a triangulation made a new higher high, which is 488 all-time high. So we're going to focus on a price from 212 up to the all-time high. And then we're just going to look for we had a five-way move. And now we expect what? Three-wave decline. Each and every single time. Nothing has been changed. An Elliott wave constant principle from the last since 1930s, since we were even born. Here's your 212. So from 212, you can count as a wave one, down in two, up in three, right to that 3 versus 1, 161.8. Running flat in 4, down to 23.6. Extended wave fifth. You have a shorter wave 5 with the gap up. You don't know that until you actually get to see the extended fifth wave. So in this case, you have a shorter wave 1, you have an extended wave 5. That's a typical relationship between these two. Extended wave 5, shorter wave fifth. Okay. So from here, how do we see where the heck we are? So we have 5 completed waves to the upside. And what are we looking for? This is, we could call as a complex. A complex correction has consider as a W, X, and Y. Is very similar to a flat. A flat is A, B, and C. Sorry, I'm going to do it this way. A, B, and C. B, A, B, and C. C wave like this is a flat. This one here is a complex. Now, if you notice, W to A has a smaller subwave, ABC. B wave to a connector X has the same ABC. The only difference between the complex and a flat that the C wave, which is an actionary wave, it always subdivides into a 5 smaller waves. While in complex, it subdivides into a 3. That's the difference between a flat and a complex. So you could have it as an AB up till here, but you don't know which way the decline is going to come down. Either it's going to be a 5 or it's going to be a 3. What I see here is a 3 because looks like a 3. You cannot count this thing as a 5. 5 would have a look like this. So it doesn't matter. But it has to be labeled right. That's why a lot of people, they just keep changing their wave counts since I posted last night. You're gonna notice, don't worry. Anyways, so what are we looking at? Now we need to find a damn support. Where is this is gonna stop? Okay. We have 212 low. We have 4-ish, whatever, 488 high. So if we're gonna do 2 versus 1, meaning we take the retracement all the way down from the low all the way up to the high, 23.6 is 401. Now keep in mind that some of your fibs, what you see here, is not going to match with your trading whatever view that you use. It's going to be a little bit off. I don't know. It's going to be close, but you're not going to have exact print to the penny. Okay? So you just got to have to just, like, if I don't know, I got to do it on Thinkorswim. I don't know what this shows there, but it doesn't really matter. 1, 2 point doesn't make a big difference. But some of these are like very accurate because these are advanced fibs, then they are color coded as well for a reason. See, like some of them are like gives you very nice prints to the highs and lows. So, anyways, so we have a 2 versus 1, okay, which is at 355.21. And we have 50%, which is at 321. Okay, that goes down here. Now, the question is this, that if this is only a three-way move, okay, we need to open this much downside here. We should be okay. I had them down here. So this is all done. So we're not to worry about. We just have to focus from here, from 440 down here. Okay, we're just gonna play with. We're just gonna have to analyze the price here. No, what has happened before is not our concern. I care less. Okay. So from here, from connector X, 1, 2, 3, 4, 5. So 5 waves in A. Remember, it's a zigzag. Okay. So now you have oh boy, some sort of a expanded flat here. A sharp decline here. Make this thing is that right. So you have an A, B, C here and a B. And then from here, what I have last night, what I did, I'm trying to see if this is an ending diagonal. Okay. If this is an ending diagonal, it's coming to an end here between this zone right here. Because it's right to this 356 mark. There's a lot of support sitting here. A lot of support. Okay. So we're going to take this high, which is 420. We can make this thing as a diagonal. Now remember, diagonals are very tricky. Okay. This could be only a 3, meaning that a 1, 2, and this is a 1, 2, 3. It could give you a bounce up toward this 375-ish kind of 80 area, and then it could come back down again. It is possible. We don't know that yet. Okay, these are very hard to trade because what happens is that the price is starting to contract, kind of shrink, kind of into and start to form a wedge. Okay, as you can see it here, it's not more directional like this. You see that if you start connecting the highs to this lower high, it's going to start forming that the the wedge here. So if this is a case, right, I think it's probably after hour kind of push another 1 or 2, but that's okay. We'll see what happens on Monday. Um, if you have this, remember you have a 127 extension sitting at 356. You have 2 versus 1 sitting at 355. You have 5 versus 3, which is the diagonal here of this fifth sitting at 350. So these are the two ones that we're gonna watch on Monday. These two. Okay, there's a lot of support here. So 350. Okay, so we're just gonna focus from here to here, and we're just gonna watch this zone to see if this thing will stop. There's no upside confirmation yet because this thing is against us right there. So the momentum is weak. I think we can pick up another much better entry um, into, because I'm going to buy, I don't care, but I'm going to buy 10 more shares. That's what my plan is. What the heck it went? This is what this is how I'm building this position over the years. Painful as hell. I have 150 shares, sorry, 175 shares total. So I have 150 I bought them here at 150 price, sorry. 150 price I paid for it. Okay. Back in 2023. Then I bought myself 10 at that 401 or something. Four that here. 401, 23. So I bought 10 here. I'm gonna pick up 10 more at 355. I didn't do anything yesterday, whatever. I'm okay. So I have this one. I bought 10 here. I'm gonna buy 10 more at 355. And then whatever, if it comes down a little bit more, that's fine. I'll deal with it. It's not a big deal. And then I'm not going to add anything. Doesn't matter what it happens, where it goes, whatever, until I get to 322. Each fib here, I want to add 1010 because I know the reason why I'm doing that, I'm willing to do that, is because it's going to average my entry really good over time. But I want to buy them at the fib. I don't want to rush and pay 360. I care less. It's called risk management. Wait for the price to come to your price, then you pay for it. If it does not, you have time, let it wait. Options is the one is gonna kick your butt because the time is running and the position is moving against you. But at the same time, but I'm gonna hold shares. I'll adjust them. It's not the last trade on Tesla. I'll trade all year long with different multiple spreads over the year. So the point is, what I am doing is not what you have to do the same thing. That I'm gonna keep the long exposure with shares, and then I'm gonna keep playing vertical spreads, shorter term, and I got the leap as well that I bought for those two leaps I did. I'll make a lower spread for one more leap, built it up over the year. Tesla as a stock is gonna uh, push all the um, sellers into a one area. I'm just gonna do a rug pull. It's a typical stock. It's just the way the stock trades. It's gonna grab all the sellers here, boom, and then it's just gonna rip, just destroy those puts in a one single session. So stock is okay. I mean, it's just this pullback is a little bit of a. I was trying to make multiple two attempts that I made so far and they failed. Okay. I was here. I was like, okay, remember I have them here. One, two, three, four, five. I came down, we came down here. I was looking for this move. We need 8 swings to confirm the low. We don't have, this is not a low until I can count 8 swings. What I mean by that is this. Remember 2 days ago, I went up with a 1, 2, 3, 4, 5. That's 5 waves. This is what I was right there. I was like, okay, fourth wave here, second wave. I need to hold this low somehow. We failed. So 1, 2 didn't work. Then we came back down here. Yesterday, I was start looking. I was like, okay, here's a low. 1, 2, 3, 4, 5. Let's do this. And here it comes down here. So that's 1, 2, 8 swings, right? 5 up and 3 down. Failed again. I was like, okay, 2 times here, then 1. It's like if that happens here, it looks like that the Tesla is not willing to form a bottom yet. Tesla will form a bottom as soon as I'm going to be able to count something like this. I'm going to keep you all posted. So if we're going to have this, we need this. It's going to make 8. from here, we need to break this damn high right there, whatever the high of the fifth wave is. When if we do this, and it will happen, there's no, then we will mark the bottom right there for Tesla to whatever the bit of a rally that Tesla is going to bring. That's where I wanted to see if RRG was just at least trying to form the hook just to see if it could give show us a little bit more momentum. Right now it's not because you see how flat the line is. We need a curve. You see how flat this line is? You see like this one has a bit of a curve. You see the video right now is trying to form a curve. That's what we need because this momentum is picking up and the rotation is trying to move like this, you know? This is more flat right there. So that's not helping yet. But it doesn't mean that, I mean, it could stay down for another day or two or three, but it will eventually move. You see right there, flat here. See, it's trying to form a curve. See, flat here, trying to form a curve. I know how these rotation works. It's not been doing this thing for God knows how many years. But for you, I know it's all new because you probably never seen it. Some of you guys probably never even heard of this thing before. I mean, we have hit a lot of trades from these from here. I know what like I have my own style of looking stocks and which stock to pick and why I'm trading this and that. I mean, just I would just have a little bit of I go more into detail than just randomly pick one and just throw money and see like, okay, let's see if I get lucky. I don't have that mentality. I do um I look at a one price on a chart in a five different ways. Is it too much? I don't know. It probably too much for a lot of people, but I think that over the years, if you analyze a price with four or five different strategies, and if you have more than three in your favor, because you know, like every strategy works different, right? Gann swings are different, Elliott wave is different, some wake off distribution accumulation is different, some moving averages breakouts are different, some Ichimoku cloud breakouts are different. You see, like there's so many different ways, right? So if so what I see is that I would have a chart, one chart that I could analyze it in a many different ways. So this is a Tesla chart, right? So I have the wave count, so I can get more fib rate, like those fibs retracements, right? Because those are more advanced fibs. So I got the VWAPs channel, anybody can draw it. So now I want to do 3 bar swing. I can do that. I can do volatility swing. I can do a percentage swing. I know all of them. So these are three different Gann swing in one. So that's three. Four is Elliott. Then I can say like, okay, if I could find signal, no, signal triggered here, one here, but I didn't get any. We don't have a signal yet. Okay, that's fine. So what is against right now? Declining price. RSI right now is at 2154. The last low, let me clean this thing up. The last low that Tesla had up down here, this low was 374. At that time, the low on RSI was 23.09 at this low. from here on a the the X wave that we're looking for, that we just looked at, was a 17% move to the upside, recovering from this oversold RSI all the way back up till here. Okay. Now this decline that we just looking at them is down 18%. So we're up 17, we're down 18. Okay. So this time RSI even went below the 23.09 reading back then. The lowest read of an RSI has ever become was 15. Never been any lower than that. So that 15 was this low. That's why you gotta follow 5 periods. That's why I don't do 14. I hate 14 period RSI. So just no. Gotta follow 5. It's gonna give you a much quicker signals. So the lowest read here was 15. We're at the yesterday close, we're at 2154. This might get another 10-point move or whatever, but it's going to be due for a bounce. Okay. Another 5, 6, 7 point. So whatever the case is, this is what I said. I was like, I think this, oops, 15, this zone right there with an RSI that being oversold should give the bounce up. Now, if you have a diagonal here, remember that leading diagonal, your minimum upside target, oops, to the upside is 380. If this yellow zone holds, whatever it is, 356, 354, whatever changes, 350. Okay. So you have 5, 6, 7 points. It's nothing. Your minimum upside would be 380. It's always going to be a prior 4. And then if that breaks, your second would be a prior 2. Your diagonals have a very well-defined targets. Okay. So they're pain in the ass to trade because they take, first of all, they take too much time because the price overlaps, like, back and forth. But when they break, that shows a very well defined targets. Always does that. Diagonals are the most easiest targets that you can lay it out on a chart. But being in a diagonal and watching a diagonal when that thing is going to break, well, yeah, good luck with that. It's painful. Triangles, diagonals are the worst patterns to trade. I avoid them as much as possible. The suckers take too much time and they just torture the hell out of you, and your premiums will be toast. You know, you need to move like, well, we don't know, but well, that's why you track wave counts, because you could expect where the third will end, and you would have the fourth wave is coming. The fourth wave is where the triangle forms, but you most people are always say like just do a simple ABC and just get done with it. Well, you have to look at your previous wave two as well, that try to compare the time between those two. It's a lot of work, because if GAN has a bar to bar relationship, okay, with time and price, Elliott has a wave pattern that, the personality that matches as well. Elliott doesn't have much time because Ralph Nelson didn't really spend that much time on working on a time analysis. He just made the wave count structure with the corrected waves and things like this. So this is what I was watching yesterday. I was like, okay, weave up is right there. Um, it's just some sort of a wave too. Okay. Now, if I'm gonna throw the swings here, this is in a sixth swing. Okay. It's tagged now. So we have a fifth here and we have this is a sixth. So the minimum upside target for now is showing is 434 to the upside. Okay, I mean, it could extend, but that's just the bare minimum as long as the low holds. But if it's gonna make another 5, 6, 7 point drop from here, then the number will adjust in a couple hours. So it measures the ATR move to the upside or to the downside, based on the current price. But whatever the low holds and then the price trying to make higher highs, and then you could kind of expect the same expected move, which you can manually count them as well. So those are just the ATR move. Um, so this is where is well, so the thing is this that RG is weak. We need to form a hook there. But I think some entry anywhere down here, I think it's gonna either we can move it back up to whatever the here's a thing that I want to show you. Watch how the Tesla weakness is coming in. This is kind of putting a little bit of a doubt. I think somebody's selling this stock. Let's look at these bars. Do this. Okay. This is the year high, right? Which was on oh yeah, 117, 440. This is the low so far, right? Look how it is. Lower bar, inside, lower, 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 right? Outside bar, out the higher bar, and then you have see if you look at the whole from here down here until yesterday. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So I have 15 trading days. So in a 15 trading days, this stock only has one that's faded and two higher bars. So in 15 days, it only made two higher highs. It made it yesterday will be third, but it reversed. As you can see it here. This is the outside bar. So you have 15 days. So how many of them are down? 1, 2, 3, 4, 5, 6, 7, 8, 9. So you have 9 down bars out of 15. 2 higher bars, 2 outside bars, 1 inside bar. So yes, weakness is there. I can see it. And I'm sure you can see it as well. Okay. The swing is down because the tile is red. The swing will turn up. This one turn green. It will whenever we're gonna make 3 higher highs. So what I would do, I wouldn't worry about the top. I would run a small swing from here to this low. This is where we have the first swing low to this high. Here we have. They kind of come pretty close to it. At 364, we were here a day before. The low is 360, and then we kind of poked here. These are reversal bars. So the next is 350. So 350, and there's a lot of them are watching the 355, which is the 38.2 retracement, remember? So we have a 355 on the wave count because the reason why that 355 is showing because you have to run your retracement from here, from this low. It's going to give you that, sorry, from here, from 212. From 212 is going to give you that three. You're not going to see it here because you're using a different high and lows. You see, this swings are different than wave count. Wave count just goes from the actual high and lows. Swing trading is you could take 5 bars, 6 bars, and you can just run swings from there as well. So that's all different. But we'll see. I mean, I can't pick a bottom, but I could come really close to it. But I would what I would watch for for um, Monday and is is this zone that I just draw right there. But this one gives you much more detailed fibs here. So we're right there. I'm gonna then we have this as a resistance. Remember, this is the first initial low. Then we rallied up and we failed. This is gonna be a resistance. Goes like this. This is your resistance for the second swing. That's the all-time high up on the top. And now we need to find is this damn support. Where is this thing is gonna stop? Resistance are there. Okay. So if you are gonna be bored, or if you're really gonna you're gonna make bets or whatever that you decided to. I know a lot of you have a habit of trading every single day. You can look for 375 spread, something that you can sell anything here, but you gotta take 375 is gonna be your first strike. You need to come above this uh, resistance in order to expect a bit more upside. The channel is definitely drawing to the downside, as you can see as a trading. So the only way we're gonna we all going to see the upside first. We need to break this channel, meaning that the price needs to come out of this channel. This is the one I took the high and lows from here. But the right way to use the channel is where you have the first initial decline, not the second one. So you take this to this, these lows. Now this low. This lows happened after. This low happened first. So I would use that. I would use this one. So what happens is see you have color this thing. Now you have this. So you take the top, put it up here. Wherever you have your first initial decline. Once you have that first initial decline here, leave the channel alone. Do not move it now. Okay? So every time when you're going to get an overthrow, price is going to come right back inside. See? Overthrow, went back right inside. We don't have an overthrow here. It's still there. So if I take this, you can connect these lows and you can do the very first low right there. You can do this way as well, right there from this low. There's a little, it's still, again, 4 or 5 points. It didn't make a big difference. I would just do this. This is another low right there. But if you're gonna, because this is a flat expanded flat, something like this. Because you need 5 waves anyways within the, so like this, 1, 2, 3, 4, 5. So I would, it doesn't matter. You put it here. These two lines connects. You'd have to connect those lines. Or you can just do initial. Leave it like this. So this is a channel. So this, once you have this channel, okay, you don't wanna move it. Just leave the way it is. You can just lock it. See lock components right there. You just lock it. Now you cannot even move this damn channel. Just it's lock. You put a pedal lock on it. You see like here, same channel when you use them. Channeling is a very good technique, but you guys don't use them. You see high here. These are your two highs. This is your low right there, and you can just leave it. So the worst case is this: if the price will come back down, retest the channel, it'll bounce. Worst case that if it does not retest the channel and if it breaks, it gets an overthrow out, it will go right back inside the channel again. Same as happened here, happens here, because the original channel stays in place. So eventually when the price will reverse, make its way out, once you will break that channel, then you break to the upside. Then you shift your channel like this. Now you have an uptrend. Okay? I'll teach you this thing all night. Just you guys have a lot of to learn. But it's okay. We'll work on them. Little by little, we're gonna cover, and more time you spend, more notes you can make over time. You will collect so much material. Because your thing is this, you have to look at it this way. Once you will learn something by watching, you sit in by yourself on your laptop, whatever, or come across a certain stock, right? That you at least you will know what to do, how to look at a blank chart, right? This could be on any chart, not just Tesla. I'm just showing you how to connect lows, how to connect highs and stuff to work with the channel. And then in between labeling and stuff, you don't know if it's too complicated for you, I'll do it for you. It's not a big deal. But it's all about practice. Because you're trading price, you should learn and you should know how to draw charts as well, right? How are you gonna trade price? Because if you just want to take a blank chart, well, how can you trade like this? Here's a blank chart. Here, nothing on it. Simple blank chart. But it has a lot of meaning to the blank chart, right? Identify the trend, potential support, where my resistance. That you have all sort of tools to use because you are indicator guy who really rely on indicators, look reading on those. If you're a moving average guy, you can throw those couple moving averages here. You can do 9, you can do 20, you can do those. I made a really nice, show you the 15 minutes triggering a lot of these bottom signals. I made a very couple days ago. It took me a what the hell is this? Okay. So what I did, I made a multi-plot shading like this. See? This is a 9 and 20 EMA on a 15-minute chart. So when they crosses, meaning they make the divergence, they will change colors. A little choppy here. This was yesterday reversal. So this pig is like literally, I mean, it's poking up a lot. Like it has a lot of these spikes. So show you the, so it basically what it is, you see like it's all the shading right there. So whatever the moving average will diverge is going to change color. It's like a band, you know? Looks nice, right? Took me a couple hours to make that shit. This is NVIDIA. Yeah, I do a lot of.
What are those moving averages?
These are 9 and 20. Yeah, you can do 9, 9. This is the one I always tell you, 920. 920 is good for 15-minute chart. I'm not a very heavy moving average guy, as you all know that. I'm just, I mean, I could change it to any other moving average, it will be the same way, but I gotta have to go to a bigger, like if I go to a daily time frame of NVIDIA, see 9 and 20 is right there. So if I could make this thing bigger if I wanted to, then I would have changed that damn script. Yeah, I could change it to different. I gotta have to rewrite fix the script. But I just only have for did for 9 and 20 for now. So this is only for 15 minutes. 15 minutes is good for a session. I don't know what happened here. I don't know if you guys noticed that. It's on your chart as well. Look, see how price yesterday? Look how it went all the way back down to 125 and it ripped right back to 130. That's crazy what happened here yesterday. So that's Apple. See, it just makes that every time it makes that divergence, it's gonna color this thing. And then it stays red until when the bars start to close up and it turns green. I think it's a nice way to look at the price. Let's see. I just did it a couple days ago. So just to keep an eye on on a price on a short. I don't really fight 15-minute time frames anyways. I mean, sometimes I do here or there, but not something that I'm really. That's meta. Log scaler. And, yeah, that's the. See, you get this kind of like a little steady run to the upside is okay, but these kind of whipsaws are wild. See, but the point is like it's okay as long as you don't have the divergence. That's when the price actually makes the move lower and higher after that. In between, if you have some whipsaws and stuff, that is okay. What is Google? Because it got hit on earnings. So you just weak, like went inside here. Just I do a lot of like, I'm always always doing something. I get bored easily. That's a problem. Always. Gann swings I learned for so many years. Elliott was the first one. Then I began to get myself into those signals. Then I come across like, okay, I wanna make my own signals would have multiple like different conditions, on them. So then I came across and made really, here S&P. Here's S&P 500 15-minute chart. So it just like or like then I made like what is this? This one. This was the best one. See, like signals are like you can make it. That's not rocket science. But the most difficult, like the most time consuming part of every signal is the back testing of it. That takes you weeks and months to see like if that actually works, you know? This one right there has a very good return and it has helped me to guide people in the same direction based of this. It has a very, very high success rate. I've back tested this thing for a long, but it doesn't appear that often. That's another thing. This is the mean reversion signal. It finds the bottom and is gonna that's it. It's gonna secure that bottom on that bar and then it's gonna move. So these are what since last year, since April, that we have four of them. So the reason that I'm staying bullish in the market is because of this. Even the fact we did made a new low, I understand that, but it's still good. I know it's still good. It's it is just a fake out that we had. We should held this low, 58.32, but we end up making this 26 point. You see, like this one, it pins on that certain candle, and then from there, that candle should hold like this one. See this low, and then you don't take out that low. I mean, now the market is kind of wild. So if it kind of drops 20, 30, 40 points, it's okay. But it's gonna stay in place. It's gonna give you that direction that this entire decline is almost done. Not time to go long. I've taken some crazy trades over the years. I mean, to me, this thing is priceless. It's just why I'm not betting against it. I mean, I believe what I have done over the years and I trust my work. That's all it is. I could be wrong, but my opinion can be wrong, but it's not what I see on a screen. So I rather trade what I see, not what I think. Well, you should do the same thing as well. You trade what you see, not what you think. Okay. You like my fancy band? I think the band looks nice, right? Let's Yeah, it's not smaller time frame is very it's gonna fire too many. You don't get too much. Sometimes you can be able to get where they're gonna fail too much. Signals like work on 1 hour and higher time frame. You're gonna have a little better read. A smaller time frame is a mess. Any trading price on a smaller time frame is a mess. You see 1 hour? See? Pins right there at this bar. Look at the upside. Look from here. This you get you can get 2 bars, 3 bars. Nobody can know this, first of all. But the point is like, is it bad? No, it's not. These are all fired on 1 hour. But nobody knows this. Don't think that the point is that you're trying to find the bottom, right? This is what you call the mean reversion. Like the price has made a low. Where is the low? Well, this is gonna find you that low. Look, it has to meet 4 or 5 conditions that I met that I put them all in there. It has a very good results. I mean, it fails as well, but it's gonna fail more on a smaller time frame. I know that. Like I go to a 5 minute look, you can still get them. You see, failed. You get you get a lot. because shorter and shorter the smaller the time frame is, more signal is gonna fire because it's looking for the same conditions, but then you have to filter those all the smaller time frame. You have to go to a little bit bigger time frame. If I go to a weekly time frame, not as that good. It's a much bigger time frame. Daily is the ideal. That's the good one. Beautiful right there. The COVID low. Excellent. That was a really good one. It has to hit them right on that day when the bar closes. The next day I will see that thing pop appears. Because the daily bar you could have a high and a low, right? That doesn't pop on the same day because it has to make a close because each bar has an open, close, high, and low, right? So when the session is going, so this whole daily candle is dancing around back and forth. But it has an open. Everybody knows where the market, we have the open print where the price is open. But from the open, we don't know what the high is, we don't know what the low is, and we don't know where the close is going to be. But we have the open price. That's all we have for as soon as the bell rings. Then from there until the session ends, then we'll know, okay, what would the high and what the low is and what the close is. Then just that's the day. So
Have you got the mean reversion signal for Tesla and Nvidia yet?
no,
No?
the Tesla, I have it on. It doesn't trigger yet.
What about Nvidia? No?
No, it was here, not here. Yeah, stocks are okay. You can still, but SPX like SPY, Qs, this works really good with ETF because stocks are volatile. You see like some of them, they have these big, big spikes, It's very tough to meet conditions when you have this kind of you need like an actual body, of a candle. This is they're very hard. Like if you do any kind of, you have a high and you have a low, but look at the open and close. That's very hard, to get a good read on them. But it will do the work. I don't have I don't have much. Here's Amazon here. I'll show you a couple of them if you want to see. There's Tesla. I can do Tesla. Last one was failed there. That was the only one. It's just crazy stock. Doesn't really get. This was a good one. Right at the low here. Tesla's a volatile stock. Um, Apple. This one. This one was failed, but it got it the second time. I've noticed like if these two are side by side, oh, they don't really appear. I don't know if I could find something like this, like something like this, they back and back. So I think I have very good results. It will fail a few times. I'll take that. What other stock do we trade? Meta. Meta has here last one. That was back in last year in July. Yeah, you don't doesn't appear that often. What do we have? Nvidia, Apple, oh, Microsoft, big. Keep some lot okay. This one, no, next bar was lower. Then it managed to man. This one is okay. Just a pop. This was a good one. Who's W3? IWM. Yeah, anywhere you see those, you can see how they work over time. Q, Q, Q. See, not a, see if you look at Qs, now if you look at SPY, see, SPY has four, just like an S&P 500, but Q has only one. It's very weird, right? Look, nothing here. This thing works. S&P works really good. I know that. This this is why I'm bullish. Ah, stay long. I got lucky. We got lucky here this last Monday. We have a gap up. Okay, I gotta go. Have a great rest of the day. Oh boy, I gotta stop this recording.